Good afternoon, everyone, and welcome to our webinar, Surviving Negative Prices from Standalone Storage, from standalone solar to a flexibility strategy that I'm sure all of us are very curious about. So, this is the agenda that we will be covering today. So I'm just going to open the webinar and give a few practical details, and then we will give the floor to our presenter, Erik van Boekel, who is from Imbalance. A bit about Solarplaza, as I'm sure some of you are well familiar. We were established in 2004, and we organize lots of conferences in this realm because we believe that the sun is the solution. And this webinar sets the ground for many things that will be then later discussed at our upcoming Storage Summit in the Netherlands. It happens on the 16th of April, 2026. And Erik, along with many of other speakers, will also be present there as well. So we hope that a lot of you then join us at the event. Okay, so practical notes. On your top right, kind of where my hand is pointing at, there's a question box. So if you have any questions at any point, please just write it down and we will answer them after the presentation. We have 10 minutes for that, so don't worry. If you have any issues, also please use the question box. We will see them and help you. My colleague Tom is on hand and he will matrix in and help you out. The slides and all the recordings will be available for you after. You will get an email within 1 to 2 days with everything. Okay, then without further ado, I thought we will tackle once more a recurring and frequent challenge of the 2026 Dutch power market, which is negative prices and of course grid congestion. And how we manage and integrate these assets need to change in a way. So I invite an innovator and disruptor with over 15 years of experience in energy and flex markets. I'm the CEO of Imbalance, Erik van Boekel. You have the floor. You can turn on your.
Thank you. Yeah, thank you so much, Steve. I hope I'm that you can hear me. Yeah. Okay. There we go. Yes, thank you for the introduction. So I'm the CEO of Balance. Recently founded the company. We started the company actually because we're also very positive about sun. So we strongly believe in solar and also wind. Don't let the Americans hear it. But we do need to be clever about it. And today's topic will be being clever with solar and wind to make sure that the business case is still solid, even with difficult times that we have right now in the markets. So just one more detail about me, maybe. I always say I'm a quite fanatic energy nerd. I literally love everything about the whole revolution that we have right now within the energy transition. I think it's one of the most challenging fields to work in. If not that, then yeah, what else is interesting enough? Maybe space, but I don't think there's anything else that's as challenging and as exciting as the energy market and the energy transition. I've been in the energy market for about 15 years, a little bit more than 15 years now. Worked for big utilities, had 2 startups myself before, and I've been on and off helping renewable energy producers, mostly the asset owners, but in a lot of cases also developers, which I can imagine are going to be participating today, to help improve the business case. And of course, I'm from the Netherlands, as you can hear, and I often say the solar capital of the world, well, at least for residential users. So we did a great job in creating a lot of solar in the last couple of years. But about 3 years ago, I started to get quite worried because I saw very deep negative prices, and not only in the Netherlands, but also in other neighboring countries, which is, yeah, obviously we're going to talk about why that's happening. It makes a lot of sense, but also it worried me quite a lot because I didn't see installations being smartly curtailed. So fast forward to today, we created Balance Energy to help renewable energy producers to gain more from the assets. How we do that, I will tell you now. Let's see if, yeah. So, long story short, in order for solar to keep growing, and we need a lot more solar than we have right now, what you want to do is you want to have a solid business case. And a solid business case, as a lot of you know, doesn't have to be a fat business case. And often we'd rather see a solid line than have years like 2022, which was great in terms of revenue, and then 2023, which was not, and carried high cost, and then 2024 was quite bloody, and then all of the benefits were gone again. And that's basically unreliability, those market movements. We'd rather have a stable and solid base, and that's actually our mission, to provide that, because we think that even in current markets that you can do that. You can create a solid, reliable, predictable cash flow for renewables, even if you have a lot of them. And of course, one of the cases which we're going to talk a lot about in the upcoming weeks is storage, which is great. Storage is a great solution. But another thing is you don't need storage per se to put solar in, and not everywhere where you will build solar, there will be storage. So it's always good to even though the integrated business case is really good, to also make sure that you have a solid business case going forward, just looking at sun, just looking at wind. And our mission is to unlock that for Europe. So the way that we envision that can happen is what we actually did is 2 years ago, I actually reversed the way of thinking that a lot of companies do, because the way that I look at the energy market, I look at the marginal cost of the plants that set the price. And maybe a lot of people already know this, but it's the gas plants that we need every day in order to balance the grid that determine the final price, which is also why in 2022 the prices were super high, and which is also why electricity prices right now, well, if you have a battery right now operating with these spreads, it's really great, because those spreads are really high because the gas prices are fluctuating a lot. The other side of that is that if you look at the marginal cost price of gas, which is also the reason why in the US right now gas is ramping up at an incredible pace. Gas is quite cheap. So to do electricity with gas, it's quite cheap and it's flexible. So it's like the go-to fuel in an electricity market where you mix solar, wind, storage, and gas. When you look at gas, and if you look at the marginal cost price of gas, then it's not that expensive. So let's say it's somewhere between 40 and 60 euros per megawatt hour, depending on what kind of gas price you of course pay. But let's say a normal gas price in a normal setting. So what that means is that if you think about that, if you say, okay, you know, it just purely generating electricity is going to cost 60 euros for gas, then how much will solar be worth? Well, actually, we know right now, because with the current market, it will be about half of that price. So it will be 30 euros. If I say it's going to be 30 euros, then I can see like the eyes of developers becoming watery because they just suddenly saw their business case for solar explode. On the other hand, that is, if you look at marginal cost pricing, if you look at how the market works, in a stable economy and in a stable environment, which obviously right now we are not in. If you look at this later, we just have a lot of stuff happening in Iran because it's March 2026. So within a stable environment, which is what I think we should look at when you create business cases and when you do strategic planning, you need to have quite low margins for solar to operate, which we can do because the marginal cost price of solar and wind is really low, right? So, but if you look at how the market is now organized, then yeah, of course, if you earn 30 euros, if you have to pay 15 euros imbalance or even 20 euros imbalance fees or 10 euros imbalance fees and then 10 euros transaction costs, yeah, that's 2/3 of the business case. Of course, that can't work. So what our vision is, what we believe really strongly is that we need to automate the process of smart assets and do that super cheaply. So that's our vision, to make sure that you can operate at very low margins. And I'm not talking about like the 10 or 15%, which the current energy suppliers are operating on, which are mostly based still on the higher prices which we had in 2022, and they didn't come down when the prices went down. But we need to have a system, and we need to have parties to operate at low margins with high volume. That's the future of renewables. Be smart about it, be cheap about it, and do it at scale. So that's our vision. We're going to use AI for it, even though AI will use a lot of energy. It's great to basically make IT at scale really cheap. That's the vision. So yeah, just a short summary, and then I'll go into the details instead of promoting Balance. So the Balance is a BRP. We're currently in the process of getting our license for the Netherlands, and then pretty soon after we will also request licenses for Germany and Belgium. So we're gonna operate in multiple European markets, and what we basically do is we enable asset owners to sell their electricity at electricity markets and make sure that those programs are in balance. So a balanced responsible party, the role of a balanced responsible party is to make sure that the amount of energy that they sold on the exchange matches the amount of energy that they produce or consume if they have a consumption portfolio. So at every point in time, which is in most markets, it's 15 minutes, the amount of energy is balanced. So what that means, so what that means is what a BRP should do, and I explicitly say what they should do, because in a lot of cases we have traditional BRPs which are organized a bit differently than this diagram. But what a BRP should do is a BRP should be really good at interpreting weather data, and not just once a day and then make a day ahead forecast and make it over a really big region. No, super localized weather, because like I said, every euro counts, every euro per megawatt hour counts. We need it for a solid business case, so we need to be as good as we can get it, because every time you deviate, you have a chance of paying high balancing fees, high balancing costs, which are great for the batteries who solve those problems, but which is not so great for solar and wind. So the first thing is weather data, and that's there's an increasing trend of hyper localized weather data, which is available. Coming up available much more often than we're used to. So in the past, what we had was these super computers which we built, which were updated like every 12 hours, and at some point we got every 6 hours we got localized weather forecasting. But right now we're going to hourly, quarterly, and it's going quite rapidly. You want to integrate that, because if you look at the weather today, this morning, the energy supplier and balancing responsible party already had to sell your energy on the market for tomorrow. And the weather is going to deviate a lot. That's and especially here in Europe. I mean, if you're on an island in southern Europe, then maybe it's a little bit less. But especially here in continental Europe, where we have a lot of clouds, or if you go across the border, we have a lot of snow. It's really important to be on top of that, because if you're not on top of that, those are the days that you're gonna lose your revenue, you're gonna lose your margins. So the second thing is metering data, which is quite nice because there's so much value still in data. So a lot of people say data is the new gold. Well, I think finally now with AI, what we are seeing is that it's really true. And it's always been true for the energy market, because if you have more data and if you have it sooner than everybody else, you can imagine that if you look at prices and prices deviate over time. So for a lot of people, the day ahead prices are now a known thing, which are also called dynamic prices. And then they have, last year they switched from hourly prices to a price every 50 minutes. So you can imagine that besides that market, we also have an intraday market, where just like the stock market, prices deviate every second, depending on ask and demand. If you know that it's going to be cloudy, and you expected it to be sunny, and it's becoming cloudy right now, and you know that sooner than the other person, then the prices are not going to reflect this cloudy weather yet. So you have a big benefit of buying extra energy, which you cannot produce yourself at a low price before the market catches up. And that's the market data, that's the final one. So the way that what BRPs do is they take all that data, they prep it, they clean it, they put it in storage, then they train models, machine learning, they make forecasting models, but they also come up with trading strategies, and it's moving quite fast now to a situation in which these BRPs are going to be like the prop trading, the turbo traders on the stock market. It's moving to that direction more and more. So every month the values on the intraday market are increasing, and it's rapidly increasing, and markets are acting faster and faster and faster, which makes a lot of sense, because now that we go to a market which is more renewable, and with batteries, it makes a lot of sense that and especially if we also start reacting to prices with demand and response, it makes a lot of sense to have a smart system that copes with that and responds to that immediately. So enough about BRPs. So we're here today to discuss, basically, I guess, how to stop the bleeding with the negative prices, in which I'm going to focus mostly on the Netherlands, but I'll try to relate to other European countries as well when I explain it. So for solar and wind in the Netherlands, we're at pretty rough spots right now, because I put a cash flow here, which I made with my friends from Encast, a cash flow prediction. So what's happening right now is that for parks which are created with subsidiary, is that you can see that 2022 was a fantastic year, and then it started declining, and now it's already difficult to cover the OPEX costs. So you can see discussions on O&M costs. There's big pressure on O&M costs to go down, and that's all coming from the declining revenues, which are lower than we expected, because basically the way that we structured solar and wind in the Netherlands is that we expected it to be a flat line. So when the market goes up, then the subsidiary from the government goes down. And if the market goes down, then the subsidiary from the government goes up until a certain max amount. That's the blue line in this graph, to cover that. So then you have a solid line in which you can have, with a low interest, the repayments, etc. But it's not coming up. So there's right now there's gaps between those two. So what's the reason for these gaps? I have to wait a little bit till the slide. Yeah, there we go. So what's driving these losses? So the first one is the capture rate. So solar is cannibalizing solar, and solar and wind they also have a small cannibalization on each other. But what you can see here is the capture rate, which basically says if you take the unweighted average price over the year, how much of that is the solar profile still worth? In 2025, we ended even, I think, a little bit low, even lower than in this graph. I think this graph was updated in October. And it's somewhere between 50% for solar. So if you have an average apex price of 100 euros, then what this says is, okay, if that's 100, then with a 50% capture rate, then solar will be 50 euros, or wind will be 80 euros. So that's the first one. But the second one is one of the biggest gaps we have right now, and that's the amount of negative hours are rising, and the supported hours are falling. And with supported hours, I mean the hours in which subsidiaries are being paid out by the Dutch government. We have a European legislation which says that no country should support renewable producers during negative priced hours on the wholesale markets, which in the Netherlands is translated by KGG, and I don't know the English verb of that or how to translate that properly, but by our politicians, basically by the government, which they translated in a way that they said, okay, so if negative prices occur, if you have a support scheme from 2023, every negative hour you will not receive support, or if it's before 2023, after 2014, you won't get it for 6 hours and longer. And what you can see is they have the same trend, right? But these blocks are pretty high. I mean, you know that solar hours is like 800, 900 hours. So this is not max production, right? But even though if you are missing like 580 hours or 380 hours, then you're missing a lot of production. So that's the second reason, and I guess especially the gap with the supported hours is really hurting. What I always say is when we build more solar, the amount of negative hours are always going to increase, because that's how it works on a sunny day. However, that doesn't mean that the shoulders, if you think about sun, like if you think about the curve, in these shoulders, that's where you earn the money. It's not here. In the shoulders is where you should earn it. And with the solar prices as low as they are right now for the panels and the installations, we have a fantastic chance to still build a solid business case for solar. And then the final one, and that's one that I think a lot of people have been talking about the last couple of years. It's Imbalance, the Imbalance discount. So the way that you can translate this quite easily in your head is about 25% of what you gain. So let's say for solar that it's last year that it's somewhere around 40 euros, 50 euros, based on the 10 euros average price. Then you lose. So then you lose over more than 10 euros based on the balancing cost, which is actually in a lot of business cases for storage the driver, right? So what we really need to understand is that we cannot just, when we build storage, there's a certain amount of storage that we can build, which solar can still support. You cannot keep building storage when solar doesn't have a business case, because the imbalance, the balancing market revenues are caused by renewables, causing imbalance mostly. So how to survive this, right? So the answer is quite simple. All of you will know. That's of course curtailment and being clever about it, right? So you stop producing and you react to prices. So it's very interesting. It's not an interactive webinar right now, but if it were, I would have asked you guys to vote. So in the Netherlands, we have about 30 gigawatts of wind and solar going onto the wholesale markets. So actually solar is a little bit more. We think that we have about 30 gigawatts just in solar, but not, of course, it's not always running and not everything was built, and you have self-consumption, so you end up with about 20, and then you have 11 give or take wind. So of all of that capacity, only 20% right now is responding to prices. So what I always say is that I assume that only 6 gigawatts right now, and I say only, it's still a really big number, but I still think it's quite low. Only 6 gigawatts is responding to prices. And the way that we look at this is we look at the auctions and then we say, okay, what if the prices go down terribly? So what if a price occurs of minus 100, then of course, or minus 150 at a sunny day? How much capacity is turned off? At a windy day, how much is turned off? I think this is still, we should be quite embarrassed, all of us, because we've done such a great job in building all of these solar and wind plants, and then just 20% of it is steerable. That's yeah, it still blows my mind. It's incredible. Of course, the reasons for it, there's a lot of reasons for it. We didn't really think about it, but I think the main reason was it was very simple. We got subsidiary, or we have this system of which we call soldering in the Netherlands. So basically, it was not needed. You didn't get a price, a price incentive to turn off your solar. But we really need to start doing that. So luckily, it's already 6 gigawatts, because if it wasn't, then the prices would be way more negative. And if you think about it, how to survive negative prices? Yeah. So negative prices occur. They belong in a renewable system. However, they don't need to be super steep. They don't need to blow up your business case. If we are clever about it, in the previous slide, I showed the amount of hours which are unsupported, because we have a period of 6 hours of negative pricing. If we have 1.5 gigawatts more of capacity, so that's really close to the 6 which we already have, and that responds cleverly to the day-ahead prices, we will not have a 6 hours of 15 minutes negative price blocks anymore. So what I'm trying to say is, with only a marginal increase of steerable capacity with the current capacity that you see over here, so without additional capacity, 1.5 gigawatts more will mean that all those hours will be supported, because you will already turn them off on a price above 0. And then because a lot of the plants will turn off, you don't have to even curtail your complete capacity. But the negative price won't occur. So, and even if you do that for one block in the 6-hour window, then still that whole block is going to be supported. So there's a lot of like indirect things that we don't think about, because it's also going to mean that if an hour is negative, that's not really negative. That it will float around to 0, right? So the main goal will still be, if you want to survive negative pricing, make sure that we curtail or put a battery next to it and start charging during those hours. We need to keep doing that, because it makes for a more solid business case. If you summarize what I'm trying to explain, so a lot of this was about balancing costs and about lowering costs. So having better strategies. So we simply cannot afford to lose 25% of our revenue in balancing fees and to transaction fees of energy suppliers. That's too much. So that's the first one. And then the other thing is, of course, you want to make sure that you get more revenues. So the way that you can get more revenues is actually by value stacking. So still right now, in a lot of cases, the contracts are based just on day-ahead prices. Like I explained with the modern BRP, we are getting to a point where we will have updated weather data every 15 minutes, and there's an intraday market in which we can trade. So what that means basically is, if it's not as sunny today as we expected, or it's not as windy as we expected, then you can wait till the TSO calls the batteries to balance the grid, or calls the gas plants to balance the grid, which is going to be expensive. It's going to be like 200 euros, 300 euros per megawatt hour. Or you can make sure that during those hours, and you say, okay, it's less sunny, it's less windy. Okay, that's fine, because I already bought on the intraday market that little bit of extra energy that I need to be in balance before the weather shifts. That's also the other way around. You can imagine that we have a lot of days where at the day ahead market, we say, okay, wait, there's going to be a negative price because it's going to be super sunny and windy. And then during the day itself, yeah, of course, it's a little bit cloudy or something happens. And then all of a sudden there's a shortage of power. So my heart beats when I see this sunny day, then I see us turn off the solar plants because we expect negative prices. And then during the day, I see extremely high intraday prices, 800 euros per megawatt hour, and solar is not turning on. We need to make sure that at those moments we are again clever with solar. You need to follow the weather, and we can be more clever about it. That also means that we can increase the running hours that way. And of course, another way to increase the running hours is just by putting the storage next to it, which again we're going to talk about. And then, of course, the final thing is risk management. So what I truly believe in is what we still see right now is a structure in which budgets are like, we have prepayments and then 12 months later we have some kind of settlement and it's all quite late. And it's sometimes even unexpected, especially when you take the support schemes into account. So I believe it should be daily and it should be transparent and should be very quick in terms of how quick we calculate the results. I see some questions popping up, that's good. So the type of PPAs which are currently in place, I'm gonna handle them quickly because I'm taking a little bit more time. So the first one is the fixed price. So everybody would love the fixed price, right? If you can just sell all your solar as produced for 80 euros, that would be fantastic. If you can find somebody that will sign that contract, always do it immediately, as long as the other party is bankable. But there's an issue there because the main issue there, the reason why you cannot sell your solar or wind energy for a long-term market is that the long-term markets are baseload. And just think about it, if you have a baseload of a year and you see a price, okay, it's 90 euros for a year, that's every hour of the day. If you have a bit of solar and a bit of wind, even if you combine the two, you might not even have 3,000 running hours. So then, like, of those more than 8,000 hours of the year, for 5,000 hours, you will need to buy that energy from the market again from fossil plants. That's the reason why those long-term prices are difficult. So the second one is indexed. It's a very common structure. So in the Netherlands, the index is mostly based on the value that the Dutch government calculates for solar and wind, correction amounts. However, with those indexes, you need to make sure that there's no gaps. So, and markets tend to change. Like I just said, a lot of value is going to intraday market now and no longer just on the day ahead. And the same goes for Imbalance in the Netherlands. If you don't do exposed trading, then you're really missing out on a lot of cost decreasing ways. So if it's indexed, make sure that it's indexed either in a way that you can add markets if they occur or being added later, or that you know where the gaps are. Then you have, of course, corporate PPAs, which I think are one of the best mechanisms right now to finance and structure solar, but it's difficult to find enough buyers. It's difficult to find enough companies that want to commit for multi-year agreements to buy the solar for a fair price. And it's a hard sell for buyers who understand that the solar energy is not worth a lot. Like we just said, if you can also take it from the market for free, you really, also the buyer needs to do it from a perspective that they say, okay, I believe either I have a certain scenario in my head about energy prices, or I believe in unification, that's why I'm doing it. And then you have the merchant model, which has a lot of different implementations. So it's definitely the best way to get the lowest markups. So to get the most value from the market in a merchant model, that's the way, right? You can compare it to if you want to finance your house and if you want to have a fixed interest fee for the upcoming 5 years, or if you have a floating interest fee. However, when that interest increases, or just like now, that the gas prices go up, prices tend to go up and down, and that volatility, your business case needs to be able to handle it. So what we believe, so we thought about this, and basically we came to the conclusion that most of the value is now earned by merchant models, but not a lot of the projects are on merchant models. So what we did is we did a little bit of research to figure out why is that. Yeah, of course, the answer is bankability. So it's quite difficult for a bank to say, okay, we will just look every day to see how much money we made. And of course, we have these great curves from companies like Aurora and Motel, and you can use those, but then still, on a merchant contract, it's pretty difficult. So what we believe is actually that what's needed right now to keep creating a lot of solar and wind projects is that we guarantee a certain revenue floor, which is possible, right? So that's the first step. So you guarantee a certain floor. On top of that, what we think is fair is to say, okay, we have transparent transaction costs, preferably passed through on the markets, and multi-market revenues. And if there's a new market which we can gain, then we will add it, and those revenues should primarily go to the asset owners. And we should share portfolio benefits and not just calculate it on one project. And the way that we then structure the cost, so if you do the top 4, then an energy company doesn't make money, so that doesn't work, because then the energy supplier or BRP won't have money. No money is no systems, no algorithms, etc. So how would they make their money? Well, the way that we structure it, which we believe in, is that you should base it on the added value. And the added value is everything you gain above a certain index, and the index can be the FVO. Everything that you outperform based on that index, and you can also say the index is just day ahead and imbalance, and because you have additional markets that you add and you have additional algorithms, then that's what you add, right? You add, if you think about it, if your solar plant just sold a lot of energy and then tomorrow it's cloudy, if then the optimizer and BRP make sure that even though it's cloudy, that you don't have to pay the fine for balancing, then that's the added value of that party. So that's the way that we structure now PPAs, which we believe in. It's based on a percentage of the added value, which puts the point to perform to the max on the energy supplier and BRPs and optimizers. So I know a lot of you will be asking yourself, give us some numbers. That's all nice and dandy, but give us some numbers. So this is for the Netherlands, for a plant, a 10 megawatt plant that we did some trading for. And what you see there is that it's almost 25% more. So imagine the price on the left, that's the price that the government calculates as the market revenue that you should get with your solar plant. So the calculation for that is pretty simple. It's the solar profile minus the imbalance cost. So it's 41 euros per megawatt hour. Everything above that comes from intraday trading, comes from exposed trading. So it comes from being more clever and not just acting on those two markets, but also from portfolio benefits. So that's the difference, but the difference is pretty significant. I mean, I know from the business case for solar, if we can add 15 euros, this is for 2024 Netherlands, by the way. If you can add that 15 euros, you probably also know in your Excel sheets that that's what you need to get back to that line to not only be able to pay your interest, but also to pay your OPEX. So that's what we believe should happen. And we're going to do it with balance. And we hope a lot of other energy companies and trading companies will follow us, because we need to do this in order to keep growing solar and wind quickly. In addition to, of course, the batteries, which again are it's a great plan. Oh, I just clicked one time. So that's that was my presentation, and I think we can go over to the questions right now.
All right. Thanks for your presentation, Erik. So you received a few questions. I will start with the ones that were sent first. From Thijs Afman from Green Grid Solutions, they asked that in the SDE++ 2026, they will have even a 15 minutes negative no support anymore, and the imbalance is part of the basic amount, not anymore of the correction amount. How will that influence the PPA proposition?
Yeah, so you need to set a different benchmark then. So the way that I think we should act on that, is that we need to agree on a baseline amount which solar can get. So for instance, let's say, don't pin me on this, but I can imagine that we can guarantee an amount of like 30 euros, 35 euros. From the PPA, from just merchant benefits. So that's like the baseline, right? And then the other part, we need to make sure that in this case that it's a project which is built quite efficiently, because then on average, so the lowest you will get is, for instance, 30 euros or 35 euros. But on average, I think like 45, 50 euros will be possible, especially with these parks, because what a lot of people don't know is if we now build a new park and we engineer it, you will have even more intraday trading than other plants. Because if you have a plant where the price needs to be negative with the subsidiary, you won't have a lot of trading. So these types of newer built plants, which are completely merchant on the market, will do a lot of transactions on intraday markets where you turn it on, turn it off, turn it on, turn it off, planned. So that's not actual happening. So it could be that, like for tomorrow, 12 to 1, you sell that amount of energy like 20 times because you're super flexible. You don't have any subsidiaries. So what you can do is you can move with the weather without subsidiaries basically hindering the market. That would be my, but it's difficult. But we are trying to, we're trying now with new parks. And then of course, I mean, there's, I think, more parts to this, because I think one of the most difficult things to this is it depends also on the curves, right? So what you can guarantee is like a specific performance on certain price points, and you can guarantee a floor revenue based on prices. But then still, probably in the model, you need to have some kind of interpretation of how prices will behave in the upcoming years.
All right, then I'm sure that was very comprehensive, and if I'm sure you guys can also contact each other via email as well. This is interesting to develop further. A few more questions from Thijs, and maybe we can take it together. One of it is how to assure financing parties during this form of trading that want to see more SDE following contracts, and intraday can be considered a risk.
Yeah, so maybe I didn't explain it clear enough. So the guarantee that we believe should be a new PPA. So that's how we structured our PPA. But I invite other energy companies to also follow us. The way that we structure it is we guarantee the SDE as a baseline. So that's the bottom line of what you get, and that's the day ahead minus imbalance basically, because that's where the SDE amount is based on. So it's based on those two markets, day ahead, imbalance. So intraday, everything you do intraday should be on top of that. That's why we structured it in this way. So it's either to avoid imbalance, or it's to gain even more revenue if you turn your solar plant off because you expected negative prices and then you see positive prices in intraday, then you turn it on again. So it should always be, intraday should always be in the model on top of it. This is why we say you should guarantee a baseline, and then, you know, it's going to fluctuate how much we get from intraday, and if everybody starts doing it, it's going to be a little bit less, because of course there's also cannibalizing effect on that. But that's the way that we structure it, and then of course the question is, okay, for the revenue that you guarantee, which is going to be SDE correction amount, are you bankable? And that's so one of the things with Balance that we took a lot of time to organize is that we have a very strong investor and bank behind us to make sure that we can do that. to guarantee that. And just to say one more thing, energy companies right now, let's say the better energy companies right now they are already earning money on intraday. They're just not giving it to you. So that's already their business case, and the income of that is way more than just like €1 or €2 transaction fee. So we think you should share that, because the business case for solar and wind needs that money to stay viable.
All right, and I like that sentiment. Then we have a question here. Can you, again for Thijs, can you sell market price formulas for all markets for a specific project also to have a performance warranty?
I have to think about do I sell market price formulas for a specific project. Yeah, so I think he means like the index type of contracts that we, for instance, have for batteries, so that you say like yesterday for a multi-market 80% capture rate. I think he means that, but maybe yeah, maybe
we can, Thijs, if you want to write a follow-up that's a bit more that can clarify this, and we can answer that. For now, I think Andrea asked, do you work with BESS only projects too, as well as which banks accept / know your PPAs? Banks in the Netherlands specifically.
Yeah. So that's multiple questions.
Yeah.
Yeah, they're both from Andrea. Yeah, I'm just trying to keep them up. We do work with BESS only, but right now we do that with optimizers. We work together with optimizers, which are really good at BESS. And yeah, we are still working on the way that we think that BESS projects should work. I'm leaning towards like tolling agreements and index contracts, but we're not that far yet. And that's also because specifically, I think we should start with solar and wind and do that very in a sustainable way before we move to BESS. However, with our partners, we already have some BESS live. It's not a lot, but I think it's about 10 megawatts or something. Yeah.
Nice. And which banks accept / know your PPAs in the Netherlands?
Yeah, to be honest, right now it's Rabobank, because we worked with Rabobank in other projects, but we have to try. I haven't yet. I'm also now negotiating for the first time with German banks. It's a bit of a different experience, but it looks like they also accept our propositions. And just to clarify, if it's needed for the financing, then we can also hand out bank guarantees. Of course, bank guarantees do cost money, so they take a little bit of the revenue away. We just also for that we price it pass through. My business partner says Triodos. That's the other one. Yeah, I almost forgot. Yeah.
Amazing. Then Thijs said, yes, correct, as a multi-market and not a DA. So we have clarification.
So index contracts, you can do it. Basically, it's already a type of index contract now with the floor guarantee, but it's now just based on day ahead and imbalance. I think we will move to a phase in which we can guarantee performance on multi-market. So right now we don't have it yet, but I think when we're like 6 months further, then we should have enough experience to do that. Yeah.
All right, then we have a final question from Arthur, and bear with me, it's a bit long, but banks prefer an index PPA over a merchant PPA for financing.
Yeah, but why? Yeah.
But why? And then it's an argument as to why the index PPA doesn't guarantee a fixed price either. It fluctuates with the reference index. So what specific risks does indexation actually mitigate compared to a full merchant exposure?
Yeah, so do I still have control of the slides? Yeah,
you do.
So Arthur, your name's familiar, I think we've met. So Arthur, so first off, I'm frustrated by this. So I don't agree. that it works this way, but by now I have simply accepted that it works that way. But I'm a true believer in merchant models, and I think a lot of the smaller energy companies are doing a great job already supporting solar and wind right now, who offer non-traditional PPAs. The reason that the banks accept the index contract and don't accept the merchant contract, which I think is already, it's also changing a little bit. I mean, it depends on when the project was developed, right? But it's the blue line that you see. So basically, Arthur, the answer is that blue line. So basically, the yellow line is partially subsidiary and partially market income, right? So the way that they structured these parks is that they expected a flatline income and then maybe an outperformance, but in most cases, there's not really an outperformance. So everything above that blue line is not modeled into the model. So they simply accepted, they expected to have a fixed amount of income, a minimum fixed amount of income based on IRSDE or from the PPA. That's the way that they expected that it would work. But gaps are occurring. And actually, those gaps are bigger if you're on index PPAs, what we are seeing, than if you're on merchant PPAs. Actually, the risk of having these index contracts, of course, depending, because I know there's some old contracts which are really good, but the index contracts by now, because they are fixed and you cannot leave and you don't get these extra revenues, are causing extra issues. So I agree with your sentiment. It doesn't make sense, but hopefully I explained where it comes from. And of course, the other part is you still need to be bankable, right? So like I said, it's pretty difficult if you have a merchant contract, then you need to strongly believe the curves that the market providers give you if you want to finance it. And that's why we guarantee the floor revenue because we believe it and we have a way of structuring that so that at least there's a minimum.
All right. Then that is all the questions. I want to thank you, Erik, for joining us for this webinar, and as well as everyone for joining us. That's, I think, all time for today. And if you guys want to see Erik, he will be, yes, Arthur says thanks, Andrea says thanks, you're welcome. to Erik, thanks to you, of course, from them. So we look forward to seeing you at this event where Erik will be there as well. And yeah, thank you for joining this afternoon. And thank you so much, Erik, for demystifying, yes, how to save from negative prices.
Yeah, thank you, Dee. I'm happy that you're back because Dee had to fly across the world in these times. So
it is a pleasure.
Yes,
thank you, everyone. All right, bye.